He said all the right things, flexibility. He would be willing to change the balance sheet usage as well, which is a really big deal to me. Rates, obviously, they're going to be flexible, data dependent, so all that's good. But I was very encouraged by the employment report. I mean, that number was exceptional. Better jobs, better wages. We've now had over 3% wage growth for 3 months in a row, rather. And we're really actually on a nice trajectory in that regard. So that was a good number to me, and it offsets the disappointment from the ISM from yesterday. So
unless you say one's lagging, one's leading, right?
Well, we're not out of the woods, but I do feel better that the big part of the economy, the consumer, 75% of GDP, that's actually perfect right now.
Pete,
really great.
Jay Powell, did he just save the day for the market?
Well,
I mean, if that was a principal concern, was that the Fed didn't get it.
I would say that he saved what was a mistake before when the Fed was in front of us. And what I mean by that is this time he said no preset path. Before we talked about the potential of rate hikes going into next year. And I don't understand, if you're data dependent, why are you actually laying out that we're going to maybe do 2, maybe do 3, whatever the number might be. And the idea now that there's no preset path, I think, is exactly what he should have voiced the first time. Now he had an opportunity to correct himself. Look at that move in the S&P, 71 points to the upside. Pretty extraordinary. But I got to tell you, Scott, when I'm looking at volatility right now it's back down at 22. I mean, are you kidding me? The moves that we're getting in the market daily, 600 points, 500 points, 800 points, 700 points. Volatility is way too cheap because Monday could be a new day.
Okay, Josh, you got a big shift in tone. You had a big shift in policy around the balance sheet. This seems to be exactly what the market needed to hear today.
That's
right. And maybe it wasn't expecting to hear it, but it got it.
Yeah, that's right. And you combine 2 things in one day: the jobs number, which obviously there's nothing not to like in that, and the Fed being somewhat conciliatory. I think it's a nice reminder that while Jerome Powell does not work for Donald Trump, he does work for the stock market. So does every other Fed chairman. The Greenspan put is something that I think contributed to the longest or the second longest secular bull market ever. And I think the markets like to hear that the Fed is paying attention to them, even though they're not supposed to, even though it's not in the mandate, even though it's only one input of many, et cetera. It's all the platitudes we're also supposed to say. The markets, specifically the yield curve, not the S&P, did get through to the Fed, and I think that today they bent the knee, and that's good.
Yeah, we were wondering, is the Powell put done? And maybe he told everybody today that it's still there. How do you see it?
Well, I still think the Federal Reserve has a focus on the wealth effect, and he talked about that directly. Listen, he said all the right things. He talked about the balance sheet. He mentioned 2016. Gee, sign me up for 2016. I'll take that year in a second. He specifically cited that. So if you're a bear coming into today, and just think about where the market was coming into today in such a perilous position, overnight, let's not forget what the PBOC did with rates. So you had that. Then to Josh's point, you had a strong labor report, and then you get the communication that you got specifically to the markets themselves. I would argue the market's up 600 today. We have not had a pullback at all. This has a potential to blow off very stronger in the near term.
You guys